that you can access the recording if you want. Let me know if my screen is visible. Screen is visible, right, guys? Okay. So shall we start then? So already we are done with the introduction. So that's what I don't want to again invest my time to introduce myself or you guys. So we have already introduced. So I'll start with the session now directly. And then in the first session, I already explained how we'll cover this entire, curriculum or content, whatever that we have designed. Uh, all right. So if you have any question in it, so you can raise that question or you can text to me on WhatsApp or maybe you can reach out personally. And meanwhile, means Monday to Friday, if you need my assistance to prepare your resume, so you can book my appointment. So it's not a paid, so you can book it there. So I'll get in touch with you accordingly. So all right. So you can book the assignment for resume writing or tips or any personal tips that you want or any barricade or problems if you're facing in your career. Just book the appointment or text me on WhatsApp. So I'll send you the link. Book the appointment. So we'll connect them. All right. So now, without taking much time, I'll directly start to the session. Okay. So it's a discussion. Discussion, it means I would like to know more about, from your side as well, what is your understanding about the accounting entries, debit, credit, P&L, balance sheets, or different aspects of, the accounting and all, and why accounting is important. So we'll discuss all that in details, and I'll also help you how you can prepare, means quickly accounting entries in Flash, right? And other important terms also, so that you would see in private equity business, right? So 2 to 3 sessions, or I would say even next week also we'll have a sessions on concept clarification and the accounting basics, accounting stuff, right? So don't miss any sessions. Try to attend live sessions only, because recorded, that is your choice, because you have paid it. So I'm not going to force to anyone, but the research says like only 4% people, they they could complete the recorded classes and all, right? That's what I would request you to attend the live sessions. All right. So shall we start then? Yeah. Okay. So here, if you see fund and accounting, so both are different things. Fund and accounting both are different things. When we say fund, it means to raise the capital, raise the capital from different classes of people, different classes of people and invest here. When we say classes of people, it's a very important one. So it can be, let's say, HNI, right? Even middle class families, and then even institutions as well. So for example, if I take the example of institutions, it means let's say insurance company, insurance corporation, then EPFO, universities. So all comes under institutions, right? So these are the classes of people. If I take the example of middle class, it means this is for mutual fund and ETF, so that we can invest into it. HNI, hedge fund and PE. Again, institutions, HNI and PE. Sorry, hedge fund and PE. Right? So this is how you can categorize it. So when we say fund, it means to raise fund from different classes of people, or people like, or institutions, or people like who are willing to invest or willing to take certain amount of risk to invest in XYZ fund, right? And then fund will invest once we raise the fund. Once we raise the fund, so that fund will be invested. Fund will be invested into equity, bonds, debt instruments, loans, derivatives, cryptos, and many more. And why the accounting is important then? Now, see, as a fund accountant, will have to do the accounting at two different levels. One, which is at a fund level, right? And another one is at investor level. When we say people, it means it's an investor. So we'll have to do the accounting at two different levels. One which is investor level and second is at fund level. But third also that you might see where we'll have to perform the accounting on the basis of financial instrument level. Financial instrument level. Are you getting me? So it means we'll have to think in that way when we say fund accounting. And now, if I add this word fund plus accounting, so accounting starts with recording of transaction, journal entries, group ledger, trial balance, right? P&L, and balance it. So now I'll come to the main moot question. Here you should know it, how different fund structures works. And if you don't know it, then how will you apply the accounting treatment? Or how will you record the transaction? Second, the very crucial and important aspect of the fund accounting business is to understand the each and every transaction in details. If I take the example of equity, we should know it. Trade processing life cycle of equity, importance of equity, then different corporate actions or dividend processing structure of that particular equity, then only we would be able to calculate the value of that private equity equity products. Are you getting me, guys? Are you with me? Right? Then bonds, debentures, loans. Take the example of any financial products. So we'll have to see how we can record the financial products in the books of fund. All right. So when we say accounting, it means we'll apply the accounting treatment. When we raise the fund, we'll apply the accounting treatment to the raising fund process, as well as we'll have to apply the accounting treatment to the different financial product. And we should ensure this, or will have to ensure this, how we have recorded the transactions in the books of fund in terms of accounting entries. That's what here. So accounting knowledge plays crucial role in accounting business. And if you don't have accounting knowledge, if you don't know how to prepare the accounting entries, if you don't know how debit and credit works in this investment space, then trust me, you would face a lot of challenges while working with the private equity or hedge fund business. Because here it's matter of only, I'll tell you two activities. If I take the example of private equity book, or if I take the example of private equity accounting, you would see in P, what you would say different. One is PCAP, partners capital book, and another one is investment instrument. And if I take the example of hedge fund, what will change then? Same fund, so it means here maybe you would say unit based fund, depends, or else it could be commitment based fund. Commitment based, it means capital. So this one, commitment based fund. Right? And then investment, again investment into different instrument. So whether you are in mutual fund, hedge fund, or private equity, that doesn't matter at all, because accounting remains the same. Debit and credit rules, that remains the same, means with the hedge fund, investment accounting, private equity accounting, or take the example of any business. Even if I take the example of normal accounting business, you would see the same thing. There won't be any change in it. So you should understand the new, that what I would say, importance of that accounting concepts and all. And that's what our intention is, to cover this syllabus, to first of all focus on basics of accounting. If you don't know the basics of accounting, how will you then understand when you raise the capital from the investor? How will you record the transaction in the books of fund? Because for accountant, record keeping matters a lot. For accountant, record keeping data matters a lot, because that would be the key or prime responsibility of hedge fund and private equity, or any accountants, I would say, not only hedge fund or private equity accountants. Even if you join any normal, the institution, normal institution, let's say if I take the example of manufacturing institution, you would say similar sort of a set of responsibilities that you will have to deal with on a day, in a day in and day out, to check the payment, to check the invoices, to reconcile the bank statement, to record the transaction in the books of account, to verify the transactions, to reach out to the different teams, to ensure the payment to the vendor on time, to record the transaction in the books of account, to take care of reversals, cancels, right, loss, any income if you have received. So you will have to record the same thing in a normal business accounting as well. Then your question that might be, it would be like, so then why private equity and hedge fund accounting is, let's say, buzzing, or why it is so critical and difficult? If you ask me this question, I would say just because of language. Just because of language. Just because of language. Why is a language? Here language would be, let's say, commitment. See, we know in academics we have heard about capital, but when we see commitment, what that creates confusion a lot. All right. But if you ask me, commitment means your capital. So that's what private equity becomes complex. Even the same reasons that you would see, or areas that you would see with the hedge fund as well. So that creates a lot of confusion, but don't worry about it. So I'm here to explain each and everything to you. So anyways, I'm going to run this program, means the training sessions. There won't be anyone apart from me. So I'll ensure it the clearance of your basics doubts as well, so that you can understand and execute in a proper way in your organization. All right. So any questions so far, guys? Any question, any doubt, anything as such? No? Yes? Anything? Are you there with me? Okay, so far good, right? Okay. Now, if I take the example of golden rules of accounting, so we know it, I know it, so it might seems like, so why here that the golden rules we are discussing, but just hold for some time. I'll help you to understand how the golden rules works, how the golden rules works at advanced level as well. So let me brief about the golden rules of accounting. Golden rules of accounting. What are the golden rules of accounting? Can anyone tell me? Anyone would like to tell, guys? Hmm? Real account? Okay. Real account. Now, here is the twist and interesting part. Real account, it means debit what? And then credit what? Goes out. Okay. If I take the example of we have purchased stocks, let's say GMT fund purchase stocks at. Can anyone tell me the accounting entry of this transaction? Anyone? Purchase stocks at 12K. What would be the accounting entry? Come on.
Purchase account return to cash account 12K.
Purchase account debit to cash account credit. $12K. So when we say purchase, it means, I'm sure it would be your assets, right? Correct?
Yeah.
What is the rule of asset, guys? Come on, come on. What is the rule of assets? Cash, is it your assets?
Yes.
Right? So anything that can provide benefit to you, so that resources or goods or whatever that you have, you can treat that as your assets. Am I right? Anything. It can be anything, right?
Yes.
Even if I take the example of trademark, if I take the example of bonds, debentures that offer certain amounts of benefits to you, that's what we call it as that instrument as an asset. Because bonds offer interest payment, bonds carry certain amounts of value, equity carries certain amount of value. That bond equities offer dividends. So that's what we call it as that instrument as an assets. So it means asset means it's a real, right? Correct? Can you say that real worth or real value?
Yeah.
Right? Okay. When you purchase any assets, now see, focus very carefully. Very carefully means very carefully. When you purchase anything or any asset, for you, if I take the example of private equity or hedge funds, see, we'll try to link from a hedge fund and private equity perspective, right? If I take the example of private equity or hedge fund, for you, the asset should be options, then loans, EBS, MBS, stocks, bonds, then cryptos, right? Or any obligation as such, if you see any obligation as such, if you see, and if you purchase that, so it means by default you can apply the real accounting rule. By default you can apply, if you see where the fund purchase the options, if you see where funds invest into the loans, then by default you can debit that investment. You don't need to think about anything. Anything means anything. So why, again your question would be why? Because the already this rule defines everything what is required. Because here if you see debit what comes in, why debit will comes to you when you purchase it, then only you will receive that, right? Purchase, in case of purchase, and in case of when you sell something, you will receive something. And then apart from that, definitely if someone paid something to you, then only you will receive. Am I right? Right? So there are situations, right? When you purchase it, of course, that would be by default debited. Why? Because you don't need to worry about it. The reason is we have a real accounting rules, and all assets, all goods, that would be your real assets. Goods, it can be equity bonds, debentures, right? That you can treat as an inventory, that you can treat as a goods, and you can purchase it out. Are you getting me? Then what about credit? What goes out? Again, if I take the example of, let's say, here, cash, which has been out from the business, 12K. When you purchase it, cash has been out. If I take the example of liabilities, where we record, come on, where we record the liabilities of the business. Liabilities would be loans taken, not given. So taken for XYZ things, loans taken, or maybe your management fees, which is pending to pay, that you can say. Then what else? Then any obligations or any liability, let's say, which is pending. Any liability which is pending. Liability pending to pay. Pending to pay. So all terms that comes under, means different terms that comes under the liability. But here the important point is, see, always note it down. Always we record the liabilities where credit side, right? Credit side. Why? Because when we paid, guys, come on, your liabilities would be your credit balance, asset would be your debit balance, right? And here, if you see the real accounting formula, what it says, try to understand it. Real, it means debit what comes in, credit what goes out. Your all liabilities will goes out. All liabilities goes out. All liabilities will goes out. Debit what comes in, it means whatever assets, all assets, whenever you received it or whenever you receive it, so you can record it to the debit side. But if you see assets and liabilities, where we record it, come on, this question to everyone, where we record total assets and total liabilities.
The balance sheet.
So it means your real account rule represent to the balance sheet. This is what I said. It's a secret. Your real account represent to the balance sheet. Why, sir? Because balance sheet is the mirror of the business or mirror of the fund. Balance sheet is mirror of the fund. Mirror, it means that will give you exact picture of a fund. If you want to calculate the net assets value, prepare the balance sheets, then you can easily split the value of value of that particular fund, means per unit. You can calculate it. It's simple. It's not a difficult one. Total assets, you have it, total liabilities, then divided by total number of units. It's just one report that you need to generate or prepare. Right? That's not, there is no rocket science. That doesn't mean you will not, it is a difficult one, you will not be able to do. No, it's an easy one. But the important is so that you should know all the aspect while preparing the financial statements so that you can compute the net assets value of a fund. And this is the important element and is a important aspect, because most of the people they don't know, and even they are not aware about it. As I said, your real means whatever rules that you would see, that will work at very advanced level. Debit what comes in, whatever comes in, it means of course you will receive cash. You will receive total assets, let's say equity, bonds, debentures, or whatever instruments that you have, so that you can record it to the balance sheets only. Why? You can apply the real accounting rules that represent your balance sheets, debit and credit side. Whatever liabilities that you will have, you can pay that, or whatever liabilities that you receive or that you create. So it means eventually that would be your credit balance. So we are assuming that it what goes out or what comes in, whatever, it's a possibility. When we are expecting, let's say, dividend receivable, right? We are expecting dividend receivable. If we are expecting it, so that we can record it to the debit side. If you are expecting fees payable, that we can record it to the credit side. Credit what goes out. So it means, for example, let's say you're going to pay my fees, right? Let's say today is 29. On 31st, when you received your salary, you will make my payment. So today that you can, let's say if you're preparing your net assets value, your net assets value, your own net assets value, then what you can do, you can create the payables in your membership account that you're going to pay the fees, and you can calculate the net assets or whatever accounting that you want to do, you can do it. But in that case, this real accounting rule will help you to do the real accounting. When we say real, it means, so whatever assumptions or pending transactions that you have, you can consider that. All right. Any question, guys? Any question? Anything?
Yeah. Sure. In this case, can I go to the previous slide which we have made one generality, right? For
Hmm.
purchasing purchase.
Hmm.
Yeah. Yeah. Here. So here what we have done is like for purchasing, what we done is like purchase account data to cash account.
Hmm.
So here cash account is it will go in the liability side of the balance sheet. You are saying?
Why? Why? See, there are different rules. I'll come to that. This is just a one. This is just a one. First, focus on the rules. I'll come to that each and every aspect and note it down each and every statement.
Yes, yes. Yeah. Yeah. Okay, got it. Yeah.
All right. So this is one aspect. Now let me know if you have any question around this, or you got the idea. Okay.
So all the receivables will be from the it will go in the under the asset side of the
Yes.
balance sheet. All the payables, whatever we is spending, it will go on the from the side of like liability side of the balance sheet, right?
Yes. Apart from the whatever assets that you have, again that you can record it to the debit side of balances. Whatever assets, let's say investment into equity, bonds, debentures, that you can directly, as it is, you can record it to the balance sheet asset side. And I'll tell you the secret. If you want to prepare the accounting entries, I said, if you remember, that's what I said. You should focus on my, each and every statement. If you want to prepare the accounting entries, if you are, let's say, if you don't know even real accounting rule, that's fine. If you know the balance sheets, right? Debit side of balance sheets, what we record? Stocks, right? Bonds means investment that we record, basically prepaid expenses and investment, correct? Or cash. Credit side we record liabilities, all liabilities. If I ask you to prepare the accounting entry for investment in bonds, how will you prepare it? let's say GMT fund made investment into bonds. What would be the entry? Anyways, if you're not aware about entry, again, I'll reiterate my question. GMT Academy invested in bonds. So where will record that bonds in financial statements or on financial statements? Where will record?
On the asset side,
Asset side. Asset side is your debit side. Yeah, you're right. You're right. I said additional part, asset side, it means your debit side.
debit side, yes, sir. Yeah, yeah.
All right. And when we say debit side, now here put your logic. Debit, what comes in? Whatever transactions that you recorded to the asset side, that would be by default debit balance. And now if I ask you to prepare the accounting entry, your accounting entry would be bond investment account debit to cash. Why? Because bond we recorded to the asset side of a balance sheets. Whatever items that you record to the asset side of a balance sheets, that exactly the same items you can put an update while preparing the accounting entries. You can update it to the debit side. That's it. As it is. While preparing the accounting entry, you can, as it is, update all debit balances to the debit side. Simple. Still, if you're not able to understand it, then you will have to apply this logic then. Debit what comes in, credit what goes out. What if you have received stocks or bonds, whatever it is, then bonds investment account debit to cash, you will have to prepare the accounting entry by applying this rule. If you're not able to apply the rule, then you should know it where we record the investment. All investments we record it to the balance sheet's asset side. Balance sheet's asset side. And asset side, it means it's your debit balance. As it is, all you can, debit balances, you can record it to the debit side while preparing the accounting entries. Anyways, it seems like you guys are not able to understand it. Any confusion, guys?
No sugar, no sugar, we ready. I'm ready. Okay, yeah.
Okay, thank you. Then if I take the example of now with the same assets, right? Same assets. Here again, you need to understand two important aspects. One, note it down. If assets increases, if assets increases, then that would be a debit balance. That would be your debit balance. If assets decreases, then that would be your credit balance, right? If assets increases, that would be the debit balance, and if assets decreases, then that would be the credit balance, right? So these are the two important rules that you need to apply while preparing the accounting entries. Now, same example, if I take it, let's say GMT fund invest. GMT fund invest into the GMT fund invest into the, let's say, options. So can you tell me what would be the accounting entry here? Come on. You have this data, GMT fund invest or invested into the options. Amount with the amount of, let's say, 10K USD.
Okay. Consider options account data to cash and bank account. 10,000 USD.
Hmm. I'll give a simple take. right? So trick, it means you should always apply to it before preparing the accounting entries. First of all, read the statement and find out two different sets of account, because we have a dual entry accounting system. So it means you should always try to figure it out two different accounts. If you ask me what would be the two different accounts here, one that I could find purchase, and another would be the cash account. When we say amount, so it means we have paid the cash. And now here you can apply the logic. Purchase, it means that becomes your assets. Asset increases, that would be by default debit balance. Cash, again, it is a part of assets. But if it is a decreases, then that would be the credit balance. See this. Now, if you ask me to prepare accounting entry, purchase account debit to cash. See how it is simple. Within a second, without any second thought, I have prepared this accounting entry. All right. So if you practice accounting entries on a daily basis, trust me, someday you can also prepare the accounting entries in like this only. Because private equity accounting or hedge fund accounting, core and critical part is calculation and accounting entries. Apart from that, most of the tasks are like recon and validation. But critical job and critical task, if you ask me, to calculate and then apply the accounting entries. Because if you prepare or apply the accounting entries correctly, system will prepare everything then. P&L, balance sheets, everything means everything. All report system will provide to you. Everything is depends on your accounting entries. Everything is depends on your calculations. If you don't calculate accurately, that will affect on the net assets value of the fund. So it means accounting entries is the crucial part. All right. So again, I'll take one more example just to have a hands-on or practice to you. Let's say GMT fund invest 1,000 USD in green bonds. Green bonds on credit. Payment will be made on or in the month of, let's say, August. Payment will be made in August. This is the bench. We don't have any tentative date, but we have received this information. So how will apply the accounting treatment? Come on. We know that, so that you can apply the accounting rule, means real accounting rule. First of all, try to find out or figure out two different accounts. What would be the two different accounts here then? Okay, one that we can say purchase, and another one is no. Purchase and green bonds both are same. Yes, credit accounts. Here you can apply the accounting rule, real accounting. How you can apply it? Come on. Real accounting rule. How you can apply it? Debit what comes in? Comes in. And credit what? Goes out. Cash will goes out. Not today, but maybe in next month. Right? We have received purchase. Yes, we have received it purchase. We have purchased it. Here, this transaction is we have purchased on credit. So you can apply the accounting logic. Debit what comes in, it means your purchase that you can record it to the debit here. Purchase account debit to
Creditor account.
Creditor account. Creditor account credit. So amount whatever that we have, so we can record it. Let's say 10,000. See this. And when you make actual payment, then credit account debits to cash, because again you can apply the logic. Cash, it will decrease, and when you pay the liabilities, then liability always that would be debited when you pay it or when you reduce it. So we'll note down that rules as well. So now note it down the another rules about liabilities. Liabilities. If liabilities increases, that would be credit balance. It means you can, while preparing the accounting entry, you can apply this logic. If that liabilities increases, so it means by default you can record it to the credit side, right? And second rule, if liabilities decreases, then that would be your debit balance. For example, let's say you're making the payment of admin fees. So your accounting entry would be payment due, account debit to cash. Debit means liability, so that will reduce. It was due initially, so that's what we recorded, and now we are making the payment of that particular liability. So when you make the payment of liability, then that liability, as I said, so liability will decrease, so it means you can record it to the debit side. For example, let's say we have management fees, payable. Payable, it means we'll have to pay that, not yet paid, so we'll have to pay that. Let's say your account, in that context, your accounting entry would be, you can apply the same logic. Your liability will increase, so it means that will credit it. And how you can record it then? Management fees account debit. Management fees account debit. Why? Will come on that part as well. 2. Payable account. Payable account credit. So on payment date, you can again post this entry, payment due account debit to cash. And here, as I said, when your liability increases, so that you can record it to the debit side. Sorry, increases, then your recording entry would be to the credit side. And here, that's what we have recorded to the credit side. All are the accounting rules.
Shivraj, can you please repeat the second part, please?
If management fees example,
Yes, sir. Yes.
see here if you see management fees, it means let's say if we are payable of $100 management fees. So $100 payable, it means it's a liability, right? When we say word like payable, guys, understand this. When we see the word like payable, so that ultimately lead to the increase of liabilities, and that would be your credit balance, right? That would be your credit balance. And while preparing the accounting entry, so that you can see management fees account debit to payable account credit. Payable account, why payable? So as I said, apply this logic. So these are the logic, guys, rules or logic or terms that you can say. If you apply and if you understand it increases, it means payable. Of course, that will lead to the increase in your liabilities. If let's say you're pending with my fees, so it means ultimately that increase your liabilities, right? Correct? Yes, no?
Yes. Yes.
Yeah. And if you want to prepare that accounting entry, let's say you guys are pending with the my fees. So how will you prepare the accounting entry? Come on. You all are pending with fees. How will you prepare the accounting entry? Come on.
Shivraj account data to payable account.
Shivraj account data to,
Payable.
yes, that in that way also you can record it, or else expense. So it means tuition fees account debit to
Yeah.
tuition fees payable or payable account. Because for you it's a payable, and I'll record it as a receivable. Tuition fees receivable account debit to tuition fees, whatever it is. I mean, if it is receivable, then I'll record it in this way, right? To understand that importance as well. So it means rules defines everything. If you read the rules carefully, then you can easily post accounting entries without any hurdle. All right. Now I'll jump on nominal account. Nominal account. If I brief about this nominal account, debit expenses and losses. Note down this one. Expenses, it means your admin fees or all fees, in short, any fees or all fees, all type of losses. There shouldn't be any excuse or exception. All fees, all losses, right? It can be on capital gain as well. Capital gain, sorry, capital gain, my bad. Capital losses as well. So if you see losses, it means losses, all losses. All type of expenses, even partnership expenses, fund expenses. It can be anything. So what it means, if you pay any expenses, let's say you paid management fees, management fees paid. Guys, there is a relationship between the expenses and cash. If you paid the expenses, if you paid the expenses, understand this, it's an important one, right? Understand, if you paid expenses paid, expenses paid, right? When you paid the expenses, ultimately your cash will down, cash will reduce, correct? Yes, no? Okay. Cash is the part of real account, right? And what is the rule of real account?
Debit what comes in, credit what goes out.
Apart from that, I told you other
Yeah.
two rules as well. What are those?
If asset decrease, we need to
Asset decrease, we need to record it to the. See this then. If your expenses increases, by default you need to record cash to the credit side. And as I told, expenses and losses, whatever means whatever expenses should be, it can be anything. You take the name. I'll help you to prepare the accounting entry. So it means all expenses that will directly affect on the cash balance. If your expenses increases, then ultimately there will be pressure on cash balance. Cash will reduce, and if that cash will reduce, ultimately while preparing the accounting entries, you should record it to the credit side. It means expenses account debit to cash account credit in this way. Are you getting me? And if I denote the credit side, income and gains. Income and gains. Income and gains. All type of income. All type of gains. All type of gains. If you see any gain, if any gain or any income that received, means if you received it, your cash will increase. Right? And when your cash increase, by default that cash will be debited because income that we are going to record to the credit side. Income that we are going to record it to the credit side. But if you observe nominal account, it means your P&L. So you would shock like, why? Because try to understand it. If you're from a commerce background, try to relate that. So it means all expenses where we record it. P&L debit side. Am I right? Come on, guys. We record all expenses to the profit and loss account debit side. Is it right statement or not? I don't see
Yes,
interest.
yes, yes.
Are you confused or what it is? I don't know. I'm simplifying it and I don't see even acknowledgement to it. All expenses and losses we recorded to the profit and loss accounts debit side. And while preparing the accounting entries, so all profit and loss accounts, debit balances or debit entries or debit records, if you see all expenses, anything as such, while preparing accounting entries, you don't need to change anything as such. As it is, you can, you know, update the name admin fees account debit. If you see, if that is in, debit side of P&L, so while preparing the accounting entries, so you can put it that to the debit side. Simple. So means all debit items of P&L account means debit side of P&L account, so that you can update it to the uh, debit side of normal means account. While preparing the accounting entries, you can update as a debit balances. And same applies to the income statement, this credit balances as well. All incomes, let's say interest payment, dividends, anything as such, if you want to prepare the accounting entries, all P&L sides credit sides items that you can record it to the credit side. So if you want to see any example assets, let's say you have received dividend received, dividend that you can record it to the credit side, right? And cash again, which is a debit part. So you can, because credit side, see, assets debit sides, that would be debit sides, and income sides credit side, that would be credit sides. Because anyways, that entries whenever you received, let's say if you received income, if you received income, there would be two impacts. One would be on P&L and another would be on balance sheets. Let's say, for example, we have received dividend. Dividend. So dividend that you can record it credit side of P&L, because anyways, that's how we record it even as per the rule, right? And cash that you can record it to the debit side, means asset side of the balance sheets. So in short, your dividends or incomes, your profit, loss, whatever that you have, that affects on both the sides, profit and loss account statement as well as balance sheet. So that affect on both the accounts. That affects on both the accounts. So you should ensure that. So while recording the accounting entries, if you incorrectly record any record as such, that will affect on the assets, that will affect on the net assets value of the fund. Are you getting me? If I take the example of let's say admin fees. Admin fees, it's an expense. Again, two impacts. One, balance sheet. Another one, P&L. P&L debit side. Why? Because expenses were recorded to the debit side. As it is, you need to record it. Admin fees. And balance sheets. Here, expenses, it means, again, it will reduce it. You don't need to record it to the credit side, but eventually that will affect on the credit balance. So your assets will reduce it. Cash will reduce it. Cash will reduce it. It's just a matter of, cash amount. If you know it, how to apply the accounting treatment, or if you know it how to prepare the accounting treatment, then you will not face any problems in your private equity or hedge fund accountings, right? As I said, your nominal account, it means your P&L. So that defines the debit, the expenses and losses, credit the income and gains. Apart from that, I'll take 5 more minutes to explain when the cash will affect and how you can prepare the accounting entries. Note down this one. Rules, always you should note down it. Anything if you receive recorded to the debit side, anything, even if you see expenses, you can record it. For example, management fees paid, if you receive that expenses, you can record it to the debit side. Even let's say yesterday you purchased one option trade and now you got the loss of, let's say, 5,000, means loss that you have received it, so you can record it loss to the debit side. Simple. Anything if you receive, even if it is a any sales or any transaction, if you received cash received, so that would be your debit balance. Simple. Anything if you pay, anything if you pay, anything if you pay, that would be your credit balance, right? That would be your credit balance. Pay, or if you want to pay in future, even in case of future payments, in case of payables, that would be your credit balance. In case of receivables, that would be your debit balance. So why I said cash, because eventually your cash will affect, not immediately, but ultimately your cash will affect. When the cash will hit to the account, then cash will affect, cash balance will change. And if the cash balance will change, then you should have a proper reason why there is a change in cash balance, right? So that's how you can narrate or brief the story about this, accounting. Rules plays crucial role. Rules plays crucial role. It means crucial role. I'll chart it out quickly so that you can practice out, in that way only. If you see any transaction as such, always try to brief that, always try to at least try to, find the two different accounts, two sets of account, and then apply the rules. What happened exactly, whether we have received or paid, and accordingly, then you can apply the accounting treatment. It's not a difficult one, right? Same entries means with the same logic, we'll discuss the accounting entries with each task: subscription, redemption, capital call, distribution call, management fees, investor accounts. So we'll apply the same accounting logic and we'll prepare the accounting entries, right? But before that, before end up with the session, so brief that out, how you can record, okay? So that in that way you can also make a note in your notebook or record it somewhere else, so that you can refer if you have any interview upcoming time for a private equity and hedge fund. So for example, let's say income, in case of income, when you see income, it means dividend that you can treat as a income. Dividend, interest payment, then interest on collateral, interest on collateral, then note down all this, okay? Income from any, income from security, borrowing and lending, income or commission from, let's say, any investment, rebate or discount on management fees or admin fees received. All right. So if you see anything income as such, there would be two scenarios where one is income receivable. One scenario would be income receivable. Income receivable. If it is income receivable, it means that you can record it to the debit side, right? Income receivable account debit to income account credit. Income account credit. All right. And another one would be income received. Scenario is income received. There is a difference between both. Receivable, it means it will receive, yet to receive. And income received, it means you have received it. If you have the scenario, income received, it means that will be your credited ultimately. Let's say dividend you have received, dividend account credited. By default, that you can record it means dividend as a credit balance, right? Income received. Income received account credit. Then what will be debited, sir? Of course, cash. Don't forget this rule. Apply to it. Okay. Any question with this? Because you would see all this while preparing the accounting entries in your books of fund. So I don't want any confusion with this lines. Let me know if you have any question as such. Otherwise, I'll jump on the expenses part. Because tomorrow we will have to practice out. We'll have a KBC. So I'll just give you one or two examples and you will have to try it by applying this logics and all. Are you clear on this, guys?
Sure.
Yes.
Should I please explain receivable and income received once, please?
Income it means you have received it. Received it means, let's say for example dividend you have received. Same dividend what if company said that they'll pay it, but yet to receive. So that portion becomes receivable part, right? For example, same fees. Let's say you're going to pay my fees tomorrow. Same fees that will be payable to you now, right? Payable it means yet to pay. You will have to pay. The same for me as well. So I haven't received it, but it will receive to me. And then I'll create the receivable then.
So all the income receivable will be the debit. And
Yes.
all the income received is all are like credit. Am I right?
Yes. Why? Because receivable that we treat. Again, one more trick that I'll explain. Receivable it means that is become your current assets. And you can apply the real accounting rule. What is the real accounting rule? Debit comes in, credit goes out. Kadam. See this, how it is simple. If you know how to apply the accounting rules, then you can enjoy it. Don't know, then you will have to practice it out and find out the relationship between each items. Okay, I'll jump on the expenses quickly and then we'll stop this for today. The expenses. Expenses it means admin fees, custodian fees, financial reporting fees, incentive fees, management fees, or any losses even, or all payable, I would say. All payables or any payables, if you see anything as such, again, there would be two things with it. One, that is when you see payable, payable, let's say admin fees payable, financial reporting fees payable, or incentive fees payable, or management fees payable. When you say payable, it means by default that would be your credit balance. Why? Or credit side entry. Why? Again, payable, that would be your current liability. Correct? And when we say current liability, it means all liabilities we record it to the credit side. That will out from the business. Are you getting me? Guys, come on. Yes, no, and your whatever the expenses that you would see, expenses always be recorded to the debit side. Expenses, that would be your debit side. So it means while preparing the accounting entry in terms of, let's say, payable, so you can prepare the accounting entry in a way, admin fees account debit. Why? Because expenses, it would be debited or it should be debited. Expenses account debit means admin fees account debit to payable. Payable admin fees or payable any expenses, just change the name, that's it. And if you paid the expenses, let's say you have paid it, it means you have paid my tuition fee. When you paid it or when you paid the admin fees, paid it means we're talking about net transaction, right? So when you see payable, it means sorry, when you paid actually, then expense account debit directly, so that you can record the expenses to the debit side, same expenses to the debit side, and then cash, that will be affected, cash account credit by default when you paid it. In case of net payment, in case of net, in case of net payment. So this is the difference. That, see, if you have any question with regards to the income and expenses, you can raise this point, or otherwise I'm done with today's session. I would expect, see, I have a number of things to share that with you. It's not a one-sided practice, okay? If you want to become a pro in accounting, you will have to invest your time. You have invested your money, but if you don't invest your time, that it will not help much. I'll not offer single penny discount in money. I'll ensure it. I'm giving you my 100%, but you will have to ensure that you are also giving your time, because for you the money is not important. Maybe for me money can be important. That's what I'm teaching you. But for you, time should be important for you, because you will have to invest your time, not money that you have already invested it. So practice with all this stuff. Create the dummy examples. If you want, you can create it and submit that as an assignment. Otherwise, I'll give the assignment to you, not today, but tomorrow, that I'll give it to you. So Monday to Friday, that you will have time, and then you can go through it and prepare the accounting entries for each and every line item with the different scenarios. Right? But yeah, I'm done with the today's session. So if in case any questions, if you guys have, so you can ask.